everyone, and welcome to the week ahead from ICM. So this week is a bit short since on Thursday most of the markets today just closed early, and on Friday it's a holiday. So it's a short week. However, it started sharply. We're seeing so much moves in the markets today, so much opportunities taking place, especially with so much movers in the market. So we're gonna start first with the movers that affected the market in the past couple of days, and then highlight the top economic events to come this week and go over some of the key major charts. So first, let's start with the key movers during COVID-19's continuous spread and impact on the economic recovery, especially now that we're talking about a new strain that appeared last week in London. So they started talking about it again. So it's there are some just headlines showing that it's faster, it's transmitted faster than the original COVID-19, and this is just causing some panic in the market, causing panic to people. Most of the governments are just going for lockdown measures, and this is just disrupting again the economic activity. So definitely this will impact the market and have an impact on the market. COVID-19 vaccines, most of the countries are now, like a lot of countries are now just accepting using Pfizer and Moderna's vaccines. Also Sinopharm from China. So these are the top candidates for now. And many countries just started the vaccinations campaigns. So this is related to COVID-19. So now what's on the headlines today definitely is just the new strain. What do we need to know about the strain? Is it tougher than the original one? So all these we need more evidence on this. Currently, the markets are reacting to definitely the fast spread, and the lockdown measures that are coming. So definitely you need to watch out for any headlines regarding the new COVID-19 strain. Brexit talks remain. There's a stalemate. Nothing happening now for Brexit talks. France just announced that they're still just covering. There are some lines that shouldn't be crossed. So this is definitely hinting that there is no progress recently on the Brexit talks. U.S. fiscal stimulus yesterday. Mitch McConnell just announced that they reached a deal concerning the fiscal stimulus. However, today the vote will take place today. The market definitely is just busy with the new variant. And it's not fearing the fiscal stimulus deal, especially that most of the market rally that took place during the past weeks was just on hopes for reaching a stimulus deal. The Fed Reserve Monetary Policy meeting, the Fed just kept policy unchanged, nothing has changed, and expressed willingness to do more if needed to support the economy. Also, this is similar to the Swiss National Bank, Bank of England, and Bank of Japan. Also, central bank, they didn't do anything in terms of changing policy or tweaking policy, but they all just expressed readiness to act further if needed to support the economic recovery in their countries. So now let's highlight the top events to come for tomorrow and Wednesday. We start tomorrow early with the retail sales from Australia, which expected to show an expansion by 2.5%. Moving to the United Kingdom, we have the GDP, the final reading of the third quarter GDP, expected to come as previous reading at 15.5. Eurozone GFK consumer climate to drop to negative 8.8 from negative 6.7 in January. This is just an expectation. This is definitely related to the latest spread in COVID-19. The final reading of the third quarter GDP from the United States to show a rise towards 33.1, similar to previous preliminary readings. Also from the United States, you have the existing home sales to show just a slight drop to 6.7 from 6.85 million. And we have the weekly crude oil report by the American Petroleum Institute. On Wednesday, we start from the US with the core PCE price index. PCE is just one of the key gauges for the Federal Reserve to cope with inflation, to check inflation. So definitely watch out for any surprises in this number. Initial jobless claims to jump 900,000 versus 885,000 last week. They are just rising significantly with the latest spread in the United States that is disrupting the economic activity. Also from Canada, we have the GDP for October to show just a slight growth of 0.3%. So we started seeing just a slight growth relative to a stronger growth during the past month. Also from the United States, sentiment for December to show a rise towards 81.4 versus 76.9. Also from the United States, new home sales to come in at 990,000 versus 999,000. And then we have the weekly oil report by US Energy Information Administration, expectations of a drop in inventories by 1.937 million barrels. So these are the key economic releases to come this week. Now let's move to the MetaTrader 4 platform to discuss some of the foreign price patterns. First, let's start with the euro dollar. I'm going to start with bigger time frames and then zoom into smaller ones. First, if you go to the weekly chart for the euro dollar, we saw that rally last week towards the bottom of the range that we talked about for a while. It was the bottom of the range for the first and second quarter in the early second quarter in 2018. And we found some sharp resistance here, and the market is just reversing today with the dollar being the strongest across the board. So in terms of support on the bigger chart, you can just go for the previous top of almost 120. So this is the range that we could be trading in for a while this week. If we go to the daily chart, you can see here this reversal that's taking place. You can also draw this channel that's combining the previous bottoms and that we traded in for a while. So you can see how this channel is still holding and we're trading in it. Watch out for any break below the bottom line of the trend line or the channel, because it could just mean further versions on the pair. Maybe we could drop to 120 again, and on the drop below 120, this could just accelerate lower towards previous key area near almost 1880. So these could be the possible targets for the euro dollar on the reversal. You can see how the market was strong. We had the move higher, consolidation, another leg higher, and then now we're moving lower. So if we break below this area here, definitely we're gonna retest this bottom area here. So this is for the euro dollar. Watch out from these levels. If we were able to reverse today's losses, maybe we could be retesting the highs again towards almost 23.89 cents. If you just also draw one of the channels at the bottom, so you can just use this tops and bottoms to draw. Maybe we could be having the final move higher, but it's just like we need confirmation for this move towards 124 before a bigger correction. Moving to the British pound against the US dollar, also where since we have this gap and then the market is moving lower, definitely the strain in the United Kingdom is just affecting the economic activity, and especially also we have the Brexit issue, so it's all dark for the United Kingdom, and this is just affecting the British pound negatively. You can just highlight these previous bottoms here, 1, 2, possible support near 130, 132. Also, what you can do is just go to previous levels. So you can just go back to trend line, combining these previous bottoms, which we rallied from up on the dip. So watch out for how the price will react with this trend line, whether we're gonna stay above it or break below it and move lower. So these could be the possible support zones, 131 and 129, 128.50. While another move higher, we need definitely to move back above 134, 134.05, just to have some bullishness again on the pair, and maybe we could be able to close the gap and retest the highs of almost 636.50 and 36.20. These are the possible levels for the British pound against the US dollar for this week. The dollar against the Japanese yen, if you go to the weekly chart, you can see that we were still trading inside the same range almost. Yes, last week we dropped towards 122, 102.88. However, we rebounded back and we're trading currently inside last week's range. So if you go to the daily chart, we're still almost the same formation, same format. You can just draw certain trend lines just to check where could be the stance that we could be trading in. So maybe this is just a positive channel that we could be trading at. Since we're almost having, most of the times we're having just lower lows, you can just also combine this trend line that's almost coinciding with the 100-day exponential moving average. So this could be a key level for traders, especially that's also coinciding with the previous support of previous resistance of almost 104.70. So watch out for any push higher towards this level, since it's a key area. And if we break above it, definitely we could be poised to move higher towards 105.70. Any break back below 103.20 could just mean further bearishness on the pair. Maybe we could be retesting almost 102.60 again. The dollar against the Swiss franc, almost similar formation. So on the weekly chart, you can see following this sharp movement lower, we're having a bit of a correction to the upside. Definitely, this is just related to the dollar strength. If you go to the daily chart, you can see how the market is just raising most of the gains they're in today. Remain 0.8945. It's a key level for bulls, we need to break above it and above the previous low of almost 0.987, 0.9. So this is just a key area, a key resistance area. Moving back above it could be just bullish again, and maybe we could be retesting the moving average, the 100-day exponential moving average. As long as we're below it, we're poised for further bearishness, and the first target to retest is the low of 88.20. The Australian dollar against the US dollar, also on the weekly chart, you can see how the market moved higher, corrected towards the 100 and 200 week exponential moving average, which were almost at the same place, and then moved higher. And now today, with the risk-off mood dominating in the market, the Australian dollar is suffering sharply. On the daily chart, you can just highlight the previous top to be a key support. So moving back towards 74.10 could just trigger some buying interest. While if it doesn't hold, we could be testing the 100-day exponential moving average, which also coinciding with the key top previously. It's almost near 72.40 was a key level previously. So these are the possible support zones for the Australian dollar. While definitely 76.42 is a key resistance level. Breaking above it would just mean we could be rising towards 77 resistance level again. The New Zealand dollar against the United States dollar, almost similar formations. Following this sharp rally, finally we're seeing a bigger correction of the full move here. So you can just use the Fibonacci retracement just to check where could be the possible levels. You can see here we're finding support near the 70 psychological. It's a key level. 70 is definitely a brown number. So watch out for how this will come and play. Breaking below it could just trigger a bigger correction towards 61.8 on the bigger picture, which is also a previous top, and the 100-day exponential moving average near 68.10. So this is just a possible extended target on a bearish scenario for the New Zealand dollar against the United States dollar. Moving to the US dollar against the Canadian dollar. On the weekly chart, you can see the steep move to the downside. You can just draw this trend line combining previous stops and expect a bit of a move back towards this line. Also, you can just draw a horizontal line on the previous bottom. You can see how the market acted as support, the price acted as support here and as resistance today. Moving to the daily chart, you can see it a bit closer. So moving above this level could just trigger a further appreciation in the pair towards the 100-day exponential moving average at 130.85. And then the 200-day, which is coinciding with the 200-day with the trend line, which is currently sitting almost near 32.30. So these could be the possible targets on a bullish rally and the Canadian dollar. While intraday, a move back below 28.40 and a break or a close below 28.40 could just lead towards further bearishness and the price to move lower again below 127. Gold prices on the bigger picture, we're trading inside the bigger channel, so you can see it's almost a channel. Some they're calling it the flag since we had a move here, and then you can see how it's tilted to the downside. So watch out how this will come and play today. We had this move lower, so if we go to a closer look, and just to draw a trend line combining the previous bottoms, where bulls could be just waiting for a rebound to the upside, while a break below it could just trigger further bearishness and a drop towards 1817, again 1820. So this could be a key level. Breaking below it could just trigger another drop towards 1800. So these could be the support or the base for gold. While today's high, you can see here the double top formation with divergence and the move lower. So moving back above or closing back above 1870.7 could just turn bullish again for gold, and we could be retesting 1900 again. Moving to silver. Also going to use the daily chart. You can see, remember this trend line that we've been talking about for a while. We had a good break with the momentum to it, and then the market moved towards its 3-month high, and then we had this bigger correction here. So now it's in general, we're just entering a new consolidation area to trade in between 2170 and 2755. This is just a bigger picture, trading back below the trend line and below the previous resistance, which was today's low 2487, could just turn bearish again for the billion, and we could be trading back lower towards the first minor support could come in 2343 and then towards 2190. While if the market was able to stand above this level and just break again and close above 2605, 2610, this just could turn bullish again, and we could be visiting 27.55. Oil prices. So as we were always saying about oil, so you can just we were highlighting this level here, the bottom of the range that we used to. This what we used to highlight for a while. So the top of the previous range 43.90 and the bottom of the range of 2019, which was almost 49.40. So this could be the range that we will be trading in for oil for a while, 43.90, 44 to 49.40, as long as the dynamics doesn't change in the market. Today's market sell-off was driven by fear of lockdown, which could just impact again oil demand levels and trigger further action from oil producers. Maybe they won't be just accepting further support for the market. So this is just triggering some concerns for investors. On the bigger picture, we're in a bigger range, $44, $49 per barrel. Breaking above 49 could just take us higher towards 52, while a move below 43.90, 44 could just mean a bigger correction for oil, a bigger drop also back towards the $40 per barrel. So these could be the possible levels. This is just a smoother picture on the bigger on bigger time frames that could guide you in your trading for a while. The Dow Jones, finally we were able to break below a key area. So this is the rally that took place while the election was going and post elections. We highlighted for a while this range that we were trading in for almost 5 weeks, and finally today we were able to break out of this range. Where could be the possible targets? So first you can just draw the previous top, 29,185, another top of 28,155. This could be the first support zone, the first solid area to show some buying demand for Dow Jones, or maybe we could be seeing some corrections. And if it doesn't hold, we could be just poised to retest the 200-day exponential moving average on a bigger picture towards 27,800. This is just on a bigger scale. We're just now witnessing fear in the market again. So this could just increase volatility, and maybe we could be seeing some big figures on the days. However, if we were able to move back higher again above 29,950, this could just erase the bearish scenario that we're trading today, and could lead to further highs again on the Dow Jones. So this is all for today's session. If you have any questions, please write them down. I'd just like to remind that all the information, news, analysis, and opinions mentioned in this week ahead, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So there's a question about the Ishimoku indicator, so about the Tinkinson and Kijinsen. So if you just go for, I'm just going to use it, I'm going to explain it, but if you go to our YouTube channel, you can find an episode about Ishimoku indicator in the cloud, and the move. Definitely, it's a moving average, so it's just combinations of moving averages shifted and shifted forward and shifted backward. This is how you can get the Ishimoku indicator. Some of the traders, they just rely on these lines to just cross to take a signal. Other traders would just rely on also the cloud to be directional for the trade. So if they see just an intersection or a crossing for the moving averages above each other, these two lines that you call conversion line and baseline, if we see just a positive cross to the upside while the price is trading above the cloud, this is just another confirmation that they took the confirmation from the cloud on the trend, while the execution and the entry took place with a cross between the Tenkan-sen and Kijin-sen. So this is just could be one of the signals if you're using also the cloud just to verify the trend. Okay, so just make sure to add some filters just to confirm. In the end, Ishimoku is just moving averages. They're just shifted forward, shifted backward, and also there are some calculations in order to get these moving averages or this formation that we call Ishimoku cloud or Ishimoku indicator in general. You are most welcome, but be careful since now we're seeing like high volatility in the market. Watch out for some trends being set up for a while. So definitely what I advise is just to stick to risk management rules, especially with the current volatility that we are encountering. Perfect. I believe this is it for today. Thank you all for joining and wish you safe trading this week. Thank you.